Hello everyone and welcome to today's video. In here I'll be following the steps that could have led you to be profitable in markets on the date of December 7th. Now, I chose this particular day because there's a clean trade, a loss, and a miss, all of them by following the steps that I usually follow, right? Just to show that not every trade will be a profit and that we can easily make mistakes because the market doesn't just hand out the trades to us just like that, right? So yeah. Now this video that you'll see is something that I've started doing quite often, just haven't been sharing it as it holds a lot of value through the concepts and many specific details that are taught through the PDF, right? So I decided to save those for the students. Now, as soon as the PDF is released, a lot more will go along with it. So without further ado, let's just get right into it. So as you know, my routine is start with the 15-minute time frame, 15 and 5, analyze where price is coming from, and where price is likely to go next. So I see this as an area of supply, somewhat of an order block. I see that price first tapped the area, creating some liquidity. Then price took that liquidity to continue to go lower. So this area here, this one, comes from mitigating this one, which comes from mitigating this range that we have here. And well, that's pretty much it. Otherwise, the other series of indications that we could get into is this one that then mitigates this, and well, next mitigation could be there, right? So in case price actually breaks this high, the next area that I could be looking for sells or to target as a buyer will be that high up there, right? So yeah, that's an area of supply that I want to keep in mind. Also, as you can see, this is my confirmed high and this is my confirmed low, right? This is the high that takes the low, creating a lower low, and this is the low, well, that was basically created after that higher high, which now turned into somewhat of a higher low. Lower high, sorry. So, anything and everything in between these two highs, two swings, right? Swing high and swing low, is basically substructure. So it's not something that we should be trading, but as it is 15-minute structure, the 1 minute here had flipped, right? So in the 1 minute, we're not really within confirmed within substructure, right? So it's not something that I would really be that strict over, right? I wouldn't skip all of these trading days just because of that, as the market did give out a couple of opportunities each and every single day that you see here, right? Have how many? 1, 2, 3, and 6th and 7th. So, well, today is the 7th. Well, not today, but the day that we're backtesting. So yeah, this is the next area that price could come back to. We could count this as liquidity, but I guess we'll see later on. The only problem that I see with this is that we don't really have anything to the left, which kind of sucks, because I do remember checking the 1 minute and everything. We could try and see if there's anything here, but honestly, it's just nah, you know. It's more likely for this low to be taken as liquidity than for that low to actually cause any kind of an important move to the upside, right? At least that's the way that I consider this type of moves, right? The same thing as this high. In this case, the high has been holding, right? But at some point, I do expect price to go above it and without causing any counter reactions. So that's pretty much all that we have in the 5 minutes. Let's see what we have. Sorry, in the 15. So let's see what we have in 5. So in the 5, we can even easier or spot what I said about the liquidity and then the take of that liquidity easier than in the 15. Then break structure and price came back up to the extreme supply to take, well, to basically mitigate that and continue to go lower, right? So this is likely to be the next area to be mitigated, right? So we will be paying attention to that. For example, depending on the time that we have or how much time that we want to be in front of the charts, we could easily just set up a couple of alerts just to keep in mind, right, in case it comes up to that area. And yeah, that's pretty much all. I will draw this an example, which is not much, honestly. It's just the 5 in a candle that then initiates this move up, right? But overall, it's just even substructure, right? This order block has cost literally nothing, so it's not something that we could really use if it came into play. but it's good to have it in mind just in case, you know. All right, price reacted to this, which is a pause in the 1 minute. I wouldn't give it much importance, but at the same time, we are obviously bearish. Sorry, so you can see even though we're within this confirmed price action, the last move was bearish. So what I do expect here to happen is this continuation to the downside, right? And well, you see that there's an order flow here, right, following somewhat of a structure, you know, just continuing to create lower lows, lower highs. So the order flow is quite bearish. So based at the very least on the 15-minute, we can easily say that we are bearish, and we can easily continue to be that way, right? So based on this, no clear flips going to the downside. Price has not really reacted to any demand in a clear way that I would like to consider a flip. And oh well, it actually wouldn't be a flip, but a supply, well, demand break in this case, right? If price reacted and then broke it, that will be a supply break that we could take advantage of. But as price hasn't flipped to the upside, then we can't really call that a flip. But as I said, a demand break. I do like, as an example, this low took all that liquidity, right? But price didn't even really react to it, so we can't really consider it. As of now, we really have nothing. The structure going down is not really clear. The only thing that I could take out of it is think that maybe in the 3 minute or in the 4 or in the 5, there might be somewhat of a clean candle here, and we could count that as a potential trade, counted this as liquidity, right? But as of now, I'm just really not interested in that. So just allow price to move, and we'll see what we can get. So the price is clearly tapping demand. Did it react to anything specific? No. So what I'll do here is just lower this area to just not have such a big drawing in the charts, you know, not for any other reasons. So price tapped demand, right? It started to push higher, but as of now, it is reacting to somewhat of a range that we have here, supply range, and we can lower it to this candle here, which is quite what is causing a reaction. So price reacted to that supply, caused a break of structure right there, and now this could be an opportunity we could take, but it's just a lot of price action in the middle as of now, so I'm not really interested into, yeah, that could have been a loss, definitely a loss. So we could even say now that the fact that it broke this supply, that also caused somewhat of a reaction. This low took liquidity, right? And this area of supply was completely, just completely failed, right? We could say that this is quite an important area to demand, right? But as of now, it's just that structure is not really clean. There is a flip for sure, but I can't really consider this my risk entry. As I said, this 5 minute thing didn't cause anything, so there's nothing for me to actually do with this. I for sure will keep it in mind that we're coming from a demand area, but it's just not really a good area per se. So as of now, we're not going to be trading. We're just going to be waiting for good confluences. As an example, this could be one. So price is tapping this somewhat of a range or not? Not really. See, okay, there you go. So that's a tiny bit better, but we do got to keep in mind that, as an example, the flip didn't really we could have not considered this a flip and think that it reacted to the whole range that we have there. So price took this liquidity and then continue to go lower, right? So we can count that as that, thinking that supply is still quite in charge. And there hasn't been a flip, there has been nothing on the demand side, and the supply side has actually caused a break of structure that we can actually take advantage of if we wanted. So as of now, the only thing that I'm kinda interested on is this extreme. I do see that pause. I just don't like it at all. It's just something a little bit in the middle. I prefer taking the extreme or something like this, because if I took that entry like here on this candle, I should have my entry on the open, right? And the stop loss right above this high, just in case price actually decides to go for the extreme. So as of now, I'm not going to be taking that. If liquidity or some sort of an extra confluence actually pops up, then that's something that I can take advantage of. But until then, it's not much for me to really do. That's quite a strong reaction. This is something that I talk about quite a lot. Yes. Which is the manipulation in this type of moves. So what I see here is price gets to an area, fails to break it, and immediately falls off. And now that price basically came back up to the same level, the exact same reaction happened. Now you could think that this is a good area to actually sell from, but that's just price building liquidity. Yeah. So as of now, this is a good trade. So the reason why I'm taking this, it's because we're mostly in a bearish market, right? We could consider this easily just as somewhat of a complex pullback, right? A pullback that just took a lot of time, right? A strong pullback. When there are big moves, you have to expect big pullbacks, right? A move like this should have a retracement like this. A move like this could have a retracement like this, right? So the larger the move, the larger the pullback there might be, of course. So as of now, I will place an entry on this extreme. As I said, I do not like the pause at all. It's just quite a small area, right? So we'll see if we can get into this. Now, another problem is targets, because we have the break of the low, which could be quite a long-term target, because as you can see, this low has not been broken for quite a long time, right? We're talking about that the low was formed in November 30th and we're already on December 7th, right? So expecting this low to be broken today is a little bit too optimistic. Yeah, optimistic. And could happen today, definitely, but it's just not something that I would really go for. So securing 5R, in my opinion, is definitely a good target as of now. We'll see what happens later, though. So this is my first trade of the day. Let's see what happens. Huge move there, and the thing is that we can count this two ways, but I wouldn't really count it the second way. The first way will be to consider this as the move that basically the candle or the move that took all of this liquidity in the middle reacted to this and now falling off, right? Therefore, we could, as an example, try and take an entry here. Right. Second option is this is just more liquidity being created for price to now come back up, take that liquidity as well, and continue to go lower, or will even go higher, of course. So as of now, I'm gonna keep the entry, but we'll see what price does. But it does look like this is what happened. Price reacted to this pause, which is the pause happened before the move that then causes this break. So it's definitely something important for price, but it's just not something clear enough for me to be able to go for it just like that. Did create liquidity. If it would have created, well, if we do consider that is creating liquidity. Yeah, I guess they could have considered it like that. But basically, it's just, I don't know. Also, price is pretty much in the middle. As I said, we're within this supply area and this demand area. The demand area is not really as strong as this one, although this one didn't really cause much either. Right, so as of now, we're really within not very important areas, so it's better to just step away in some of these cases, unless something really clear pops up in them, right? So let's just allow price to move. Let me actually do this 1 sec. All right. So, yeah, as of now, I think I could go for this as my confirmation entry here. My problem will be if price decides to go higher than that and respect the extreme and basically take this high as liquidity. Well, the whole structure as liquidity. Let's see how far price gets. Not too far. Gotta say that there was a bullish break. Just keep it in mind. Keeping it in mind. But just broke it entirely. Yeah, right now it's just watching price action, right? Trying to understand what's going on. As an example, there was this pause. Price respected it, so we could go for this as our confirmation entry, but it's just too risky. Price could easily just get up to this, taking everything as liquidity. I do see some liquidity, but as an example, this liquidity was taken. We could say that this high create some liquidity as well due to this strength that he had on the way down. count as something like that. But this POI is already broken. Sorry, not broken, but mitigated, so it's not something that I would really consider. Now, something that did happen here is just this minor break, turning the order flow in the 1 minute to bullish. Now this break, so as an example here, we have risk entry. Now potential confirmation entry that we could go for. So not something that I'm really a fan of, due to the fact that it's been quite a weak structure as of now, right? But going for something like this could definitely make sense to go all the way up to that area we are expecting, right? Up to this. Yeah, I guess, but it's just a little bit too risky. So the thing is that, as an example, right now, the steps that I follow to take a trade are here, right? The confluences or the evidence that I need for a trade to work out is definitely here. The structure that I'm seeing right now has the steps that I have to follow and the confluences that I need to take a trade, but I'm just not confident enough with the structure. The structure is just very compressed. As you can see, price hasn't really moved for the past 46 minutes. It has moved within 9 pips, right? So and also the structure is just kind of rangy, right? It's just ranging quite a lot. This is a break and it is a change in the order flow, and we could even consider this this POI as supply. Therefore, this could be considered a flip, right? But it just doesn't really make sense for me. Yeah, it just doesn't make sense for me. So I think this is a good trade, but I'm just not going to take it. I think it has enough evidence to go for it. It has enough confluences to go for it, but it just doesn't make sense for me to risk it on this. I prefer to wait for extremer areas to be mitigated or just cleaner setups overall, right? So for now, we'll just let price play out. That will be a trigger. Quite a strong reaction. It actually broke the high. So if we would have been on this, at this point my stop loss will be below this low, or maybe even a break even, not sure. Probably below the low. Strong reaction. It did take down liquidity, so we do have to remember that. So what could easily happen now is price coming back to this and going higher, right? Let's delete this trade as we're not trading it. Let's see what happens on this demand that we're currently sitting on. So we already broke it. So this is what I see right now. There's demand here. Price reacted to it, then broke it, so we have a flip. Now, what happens next? Broke it a tiny bit more, ranging, impulse up. So here's the thing, we're mostly bearish, right? We already know that. So this move up took a lot of liquidity from this point, and it also, did it react? Oh, it reacted to this. So as I said, this is mitigated, but the wick isn't. This supply here was not mitigated. It's a little bit tricky though. It's not really a good trade overall, but it did take a lot of liquidity from everything in the middle, right? And it has some inducement of some sort here. So does it make sense? Yes. Would I go for this? I mean, this is sponsor candle due to the fact that it took liquidity, it's reacting to supply. This supply, if we think about it, could be considered the pause just before the break of this low, right? So somewhat of an important area for price. So I'm thinking yes, and it has some inducement in its. So the thing is that I just need a couple of confluences, right? And in this case, it has 2 extra confluences, which are this liquidity that we have here, that we see here, and this liquidity taken down there, back there, sorry. So this makes sense as of now, so I'm going to go for it. And same thing about target comes in play, because as an example, if we would have gone for this one, how much was it? 13 and 17. If we would have gone for this one, sorry, the 5 hour would have been hit, right? But barely. So you can see the price action hasn't really moved much. But what I also see is somewhat of a impulse correction, impulse correction, impulse, right? So it does make sense to sell. Also, it's pro order flow in not only the 1 minute but in the 15 minute as well, and of course the 5. It's a sponsor candle. It also has some inducements. I think it makes sense. Now, target wise, again, we could target this. Could just go for 5R. We could go for something a tiny bit riskier. In other cases, I would have somewhat of a demand area drawn, right, that we could easily target. But in this case, we just really don't. So as of now, we'll secure 5R. I could easily get down to this, but just too risky for me to target. So let's see what happens if anything else is created. Nope, straight through. Okay, well, that's somewhat of a good reaction. I guess that's a good start for sure. After this low is broken, which it has been already, my stop loss will be above this high here. So above that high. And we said, oh, I changed the, hold on. Okay, so that's the way it is. So 5R is pretty much close. And that's 5R. Alright, it was a good trade. I got down to that low. It was a good trade. And now the thing is, though, that not sure if I would have gone for this on the funded account, right? And the reason to that is because it's kind of a risky trade because this reaction really didn't happen in a very strong POI, right? If this would have been unmitigated and it had liquidity, then definitely. The flip as well was not really good, and the only reason why I actually would have gone for this is because it took liquidity, and it also has liquidity here to take on the way up, right? So what I'm trying to illustrate here is that sometimes you won't be too sure about a trade enough to basically go for it, but what you can easily do is just stack up the confluences. If you have 10 confluences in favor of the trade, then it's better to go for it than to miss out on it. Now, if you take the loss, then you just realize why you took that loss. Also, the fact that this move didn't really go too far and didn't really break any major stuff was something, right? It did give me somewhat of a bearish feeling of something like that. Yeah, that's good trade 5R, and that's pretty much it as of now, right? Yeah. Let's after taking as an example, if this would have been the first trade of the day that I took and it was a win and I didn't take any kind of losses at the beginning of the day, then this would have been the only trade, right? 2.5% out for the day. Not crazy, but really good profit. Could have been what? 13.82. Yeah, that's fine. You know, I prefer to go for conservative targets before crazy stuff that could get me missed out. So now just analyzing, right, because at this point I would not be really trading, and it's also coming down to the time that I'm not really trading anymore. Price, we could say that this is supply. So price flipped after reacting and breaking it. Have demand here, which is the cost to that flip. Price reacts to it and works out, and now pushing higher. I don't like when price does this, like it just... so suppose we have something like this. See strong moves, and then it just does this. The way that it's moving up is just awful. I look at all of this and I just think of liquidity. That's all that I see. So, as an example, some scenarios that I've come across in this type of price action, where price has been pushing lower and lower and lower with no stop, what it can usually happen, what it can easily happen is price coming back up to a supply area to then continue to go lower, and what we can take advantage of is somewhat of a really good confluence to trade around here, right? To trade up to this area, and if we manage to be profitable with this move, then we'll probably avoid trading this one. But if it gets here and we have enough confluences, then we definitely go for that, right? It's just a little bit thing, yeah. That move created liquidity, right? Because you have a low here, have a couple of lows here, and it just gets to that level, continues to create more. So all of that's just liquidity. So now having liquidity, right, is something that I explained. Having liquidity in both in a side, it doesn't really mean that price will get here to take that liquidity and fly, nor that. So sorry, it means two things. It can either take that liquidity and fly, or use that liquidity to make price go lower. Right. So as an example, this entry here could be a good entry because thinking that price is going to go lower to take that liquidity is definitely a good option, right? But at the same time, it could be to take that liquidity and fly off. All right, so that's the reason why we don't only trade just based on liquidity, but liquidity is just an extra confluence that we can use in our advantage. So as of now, it took liquidity and it has done nothing more than that. It took a lot of liquidity, right? But nothing more than that, as mentioned. Broke the highs. As an example, if I wanted to trade something from, as an example, this, something like that, could be definitely a good trade. But in this case, it decided to take this liquidity, broke the high, mitigated this cause, went higher. At this point, I wouldn't be trading anymore. Does anything pop up on this supply? This man took the liquidity. Well, that's actually good. As an example, price gets to an area of supply or demand, depending on the case. In this case, supply. Created liquidity, took that liquidity, and now basically flipped. So as an example, an entry from that point could definitely be good. So at the very least, monitor. And in this case, it would have failed. But again, it took liquidity again, and now it's falling. So let's actually see if price by any chance came back down to this. It's currently reacting to that wick. This could be considered liquidity. And it acted as liquidity and actually held that POI. Not as much as we would have expected. So example, if we would have bought from this point, we could have targeted this supply, right? That took a lot of liquidity and also has some liquidity in the middle, but it would have not reached that point. So we would have been, well, at least not as of now, right? I'm not sure if it continued to go higher. Well, that would have been target reached and even went higher than that. Spotting and narrowly changing the order flow that looks strong enough can be so good in some cases. I have had cases where I've spotted the first change in the order flow in the 5 minutes as an example, and taking advantage of that is quite powerful in certain situations. So let's go back, right? Let's try to analyze what has happened and how it was, how did we actually get to this? So the first trade of the day that happened was this one, which we entirely missed out on. The reason why was because, in my opinion, this is not a strong supply area for me to consider that. Liquidity, I kind of made a mistake when spotting it because I thought of it like this, when I actually created clean equal highs there. Now, again, I saw this liquidity being formed, so at the same time, it was a misanalyze. Analysis on the liquidity, but at the same time I did spot that the liquidity was here, right? So even if I would have seen this before the trade worked out, I would have aimed at the extreme. It made no sense for me to go for this, right? For me, the whole move would have been something like this. Maybe what actually happened was something in the 5 minute, 3 minutes, something clear that we could have actually taken advantage of, taking that liquidity as well. But basically, it's just not what I was expecting. Also, price was within a demand area and a supply area, so pretty much price action in the middle. So in cases like that, I just prefer to avoid it. It's better for me to miss out on a trade that works out. As an example, there has been cases where I have price action in the middle, right? And I do like the setup that is kind of forming in there, right? But I just don't like the fact that it's within substructure, right? So, or within two important areas. So what I prefer to do is to see one of them fail and then try to find an extra confluence that we can actually trade based on that failure of one of the two important areas, right? So what I would have liked as an example to happen here is price when he took this liquidity and mitigated this for it to break this high, and at that point I definitely could have traded something like this. And the same thing the other way around, right? When price broke this low, at that point I was completely sure that we were continuing to be bearish, right? Continuing to be bearish, right? So any point where I could sell was good enough, right? But of course I like to stack up the confluences, and the more confluences, or not the more, but it's more like quality over quantity, right? So the better confluences you have, well, the better, right? The better for the trade. So in this case, this candle took liquidity, so I consider that a sponsor candle. Then it created some liquidity, which I would consider actually inducement, not liquidity itself, but basically then causes the flip. Price came back up, took the inducement, reacted to the sponsor candle, and fell down quite strongly, right? In this case, if we would have aimed down to that, would have been a nice target, but as I said, it's quite risky as well. If I would have seen this move happening, maybe there was some way that I could have altered it, but to be honest, when I place a trade, it has targets and it has a stop loss, so I prefer not to move that until my rules say so. Right? So as an example, trailing stop loss is not something that I really do, except of course break even and well, trailing as an example to the half of it or something like that. The other trade that we kind of missed out on is this one. I said that it did have the steps that I look for, but I just didn't like the fact that we were within so much confirmed substructure basically, or price action was just too rangy for us to be able to trade that. Stop loss would have been 17, yeah, 17. With targeting this, which would have been definitely impossible for me to spot that, for me to think that price could easily react to this. If this supply was not mitigated and yet it had liquidity, then definitely something that I could have taken advantage of. But just the week that was left unmitigated is just not a thing that I consider POI. Now, when it causes something, when I see that price as an example, sorry about that. Hold on. All right. So when I see price causing something, right, like a flip, a break, a major break, a trend change, whatever it is, I try to find out where is that move coming from and if I can take advantage of it, right? So it's mostly about reacting, because we could have not really predict that price was going to get all the way up to this, react and fall, right? We could have predicted this one because we are reacting to what already happened, right? We're just waiting for an extra trade to that first trade that we I don't want to say missed out on, because we didn't really miss out on it. It's just not something that we would have traded, right? Based on my strategy, based on the steps that I follow, and based on my rules, this is not a trade that I could have taken in any way. This one for sure had enough confluences, had all the steps that I look for, had all had basically all met all my requirements to take a trade, right? In my opinion, this trade was worth the risk, so definitely something to take advantage of. The only thing that was missing was the target, as we really didn't have anything to aim at, but it is what it is. Sometimes you'll have something really clean, sometimes you won't, right? It's just as simple as that. So that's basically it. That's basically all that I wanted to show in this video. I'm actually going to step onto the next section, right? Which is the PDF advertisement, right? As you know, or well, if you don't know, you can check my YouTube. I'm going to be selling a PDF, which is actually now a course, right? That I'm going to be teaching basically, with all the concepts and the steps that I use basically on a daily basis to find profitability in the market, right? So basically, you'll have access to videos of trade recaps or of different weeks, days. Videos like this, as an example, will be quite often, right? If I can do it daily, I don't want to promise anything, because sometimes I just, after resuming the day and after seeing what I did wrong, what I did right, sometimes I'm a little bit tired. So doing another video with an explaining like this, which took 35 minutes so far, is quite a lot of time, right? But definitely there will be markups. There will be a lot of stuff included there. Of course, there will be somewhat of a community. I'm still not sure if it will be through Discord or Slack. But yeah, definitely something that, in my opinion, is going to be worth. It's not that expensive. I talked about it on the other video. So that's that's a way for you to learn from me, and of course, all the free content shared through Instagram, Telegram, and YouTube. I mean, I think that out of today's video, you can find a lot of value, right? It's just that I try to be not very specific because these concepts are now being taught in a paid way, right? So I don't want to make people that paid the course to actually feel like they paid for nothing, right? So yeah, that's all, boys and girls. I hope you enjoyed it and took something away from this video, and I'll be seeing you on to the next one. Goodbye.